I've been warning you that some recession indicators have been flashing and very reliable indicators, but I told you that I was waiting for something to happen, and it happened today, and I want to share that with you just to start off. It happened today on the Friday session. I'm making the video here on Friday after the close. Now, I've talked to you about the uninverting of the yield curve between the 10 and the 2, okay, and what an inverted yield curve means when it goes negative below this dotted line. That means that short-term rates are higher than long-term rates. Here, the relationship between the 10 and the 2, when it went negative, the 2 was higher than the 10. It uninverted on September 6th, and it's been steepening, and this is telling us that recession is going to happen. Eventually, it could pop right back into negative territory briefly right before the recession hits. Sometimes the case. But I told you that with the uninverting of the yield curve back in September, it's telling us that we're going to hit recession probably around 6 months, give or take, maybe a little bit less, maybe a little bit more. I've talked about the Palm rule already being triggered back in July before this signal was triggered. We're 6 months for that. 9 months is April. So again, I'm looking for this recession either in the first quarter, in all likelihood, or probably at the beginning of the second quarter based on the Palm rule. Again, 6 months, give or take, a little bit earlier, a little bit later. Right now, it's been about 5 months for the Palm rule. Here we've had the uninverting of the yield curve between the 10 and the 2 just over 3 months ago. It's a little bit over 3 months ago. And now today, a brand new signal is being triggered. Had the uninverting between the 10 and the 2, warning recession is coming. We get the uninverting between the 10 and the 3 month, which is telling us recession is getting extremely close, about to happen. That's what the inverting between the 10 and the 2. Now, here I have the NASDAQ. I'm watching this trend line right here. Did get a doji on the daily chart. I'll show you all that here over the weekend via this video. Just before I leave this chart, I want to say this. Again, as we get the steepening of the yield curve, eventually NASDAQ will peak, and as the yield curve sharply begins to steepen, after the uninverting of the yield curve, it's predicting recession is about to start. When we had that happen, we had the uninverting of the yield curve back in September. All the experts and all over the internet, people are saying, oh, rates are normalizing. Oh, this is a good thing. No, it's not. An extremely reliable indicator. When you get the uninverting of the yield curve and start to see the steepening of the yield curve, recession follows. And before that recession hits, the stock market peaks and begins to tank. Fed, around the same time, before the recession hits, starts cutting rates. What you see is the Fed starts cutting rates, the stock market peaks after that, and eventually the recession shows up. Signals are warning about that. So here's the 10 and the 2, but rates are not normalizing. This is not a good thing. This is a thing that's telling us when you get the uninverting of the yield curve that recession is getting ready to start. Between the 10 and the 2, let's take a look at the 10 and the 3 month. And here it is. Now, the pink shaded area is the Fed funds rate. And again, notice the Fed funds rate, it's been coming down. Again, the Fed is now cut by 75 basis points. They did a 50 basis point cut initially. And I told you when we got that cut, before we got it, I told you we're going to get a Fed pivot rally. Historically, that's what's happened. Now, the rally's gone a little bit longer than other rallies at the last two, the end of the bull market for the last 2 bull markets. But this is the longest bull market in history, and you've had so much stimulus, and you got the QE going, and it's playing out a little bit different. But again, it's still going to happen. This recession is coming. This is between the 10-year and the 3-month yield curve. It has uninverted as of Friday's close right there. Tried to do it previously, backed off, and it's now done it. See this little zero right here, the center line right there? It's uninverting, meaning that the 3-month was higher than the 10, is now below the 10. The 10 is higher. And we're getting this, warning you the recession is about to start. Getting extremely close now. That's what the signal's warning. And again, I think the S&P is going to go a little higher and hit this upper channel line, and then I think it's going to peak, and I think it's going to turn. Again, I've been talking about the monthly trend line, and we just hit that monthly trend line on Black Friday 2 weeks ago. That was the last trading day of November, and we reached the target level on the monthly chart. I told you I thought we would what? Overthrow it and go into the 6100 area, or if we take our time, maybe go into the 6200 area. But I think, again, in December, either with the Santa Claus rally, the Fed, whatever the catalyst may be, I think we go up and we hit this trend line. And then I think you're going to see a peak surrounding this trend line right here. I think you'll see a reversal. We've already hit the trend line in the monthly time frame. I think we overthrow it to hit this trend line as we're getting the uninverting of the yield curve. Again, I'm going to be looking for a market top and for the recession to likely show up in the first quarter of 2025. And before it shows up, the stock market is going to peak. That's why I've talked about, again, this trend line so much and the trend line on the monthly chart. And I told you, started December, I think you've got a very good shot that we're going to see a peak in December. I think you got about a 95% chance that's going to happen. If we don't see a peak in December reaching this level, I think you're going to see it in January. And I think you got about a 99% chance it's going to happen in January. If you don't get it in January, I think you've got about a 100% chance it's going to happen in the first quarter, because the Psalm rule was triggered in July. And 9 months from that is April, the beginning of the second quarter. So I think you're going to likely see the recession show up in that first quarter in all likelihood. But we can't sell off in December. We could sell off in December before the month ends. We did in 2018. Just because it was surrounding the holidays, it didn't stop a 20% sell-off in the stock market. The market was throwing a fit because the Fed was raising rates, and the Fed in December said, oh, we were just kidding. And then the market reversed after a 20% sell-off. We're going to get the Fed meeting. Markets often come and top and have continuations of the trend surrounding the Fed meeting. I'll show you the chart. So this is coming down right here. As this is coming down, the Fed funds rate, again, the market will eventually peak and begin to come down, and the uninverting of the yield curve will eventually even steepen more. It'll go in positive territory for a while, and it'll even steepen more. Start seeing an aggressive sell-off with the market. But this is the S&P weekly chart right here. I think we're going to go a little bit higher. Again, I continue to say it. Again, I remain bullish. I believe that we're going to new all-time highs. The S&P 500. A video all the way through, because we now have a continuation pattern that is forming the intraday charts. I was warning you that time is short. More of the same. Oh, rates are normalizing. This is good for the new bull market. Poppycock. Falderall. Balderdash. It's a Kool-Aid for the herd, man. I wanted to show you this signal because, again, this is, even if it, sometimes it'll go uninvert and then quickly go back, or it'll remain here for a while and eventually, again, uninvert again. The fact that we got it between the 3-month and the 10-year, this is telling us now we're getting very close to that recession. I wouldn't ignore this, but I am looking for a topping process, again, surrounding the upper channel and the rising wedge on the S&P. Live it, love it, learn it. If you like the chart, you like the indicators, please support the channel with the link directly below. I don't have any sponsors, just a direct relationship with you. I just put it all out there and ask you to partner with me because I don't want to sell you a bunch of junk. So if you can do something to help out right now, I'd really, really appreciate that. The channels on YouTube, they make their money through sponsors. I don't want to sell anybody anything. You know, I hope you're here to look at charts, indicators, and hopefully you like them as much as I do. I like charts and indicators a lot. If you like that, please support the channel today. I'll have a link below to take you to a secured site. You could donate any amount you want or make it a recurring donation. If you do that, I thank you. Take a moment to do that and help out. I would really, really appreciate it. I thank you for your consideration for that. Check back Sunday. Sunday morning, I will be posting another video talking about the NASDAQ. I'll be talking about possible top. And again, we might reach higher levels. We're hitting the monthly trend line. I'll show you these things. NASDAQ completed Friday's session with a doji candlestick. We had that inside day. I told you again, candlesticks mean nothing unless they're confirmed. I'll be talking more about NASDAQ in my next video, showing you some other important indicators of why I still think the S&P is going to go higher. Check back on Sunday for my next video. See my latest Bitcoin video, which again is like the S&P, it's just below the upper channel line. I'll link that video at the end of this one. Pretty interesting. You might want to check that out. They have a positive correlation. It'll be interesting to see what the Fed has to say about the inflation uptick in the PPI, the wholesale inflation. We talked about earlier in the week. We saw the inflation data rise, and it was a sharp rise. Now, next week, we're going to get the FOMC meeting. Again, could we see a peak surrounding the Fed? Maybe it goes past that. Maybe we see it surrounding the holidays. We're going to have very, very light trading. Again, markets can be easily manipulated during the holidays. Remember, we had the peak the very first week of January in 2022 at the 2022 top. This week, we're going to get retail sales on Tuesday, the 17th. Then we're going to get the Fed. Rate decision for the Fed. They're still expected to cut by a quarter. Fed Chair Powell's conference again, because we haven't reached the objective target in the daily time frame or in the weekly time frame. We very well could do that surrounding the Fed or the holidays here in December, even drag out into January. You got a good shot it happens in December. I think the odds are greatly increased if we don't reach my target, which I think we will in December in all likelihood. I think the odds greatly increase in January because of those negative divergences that are forming on the weekly and the monthly chart. Then we have, again, after the Fed, at the second revision of the third quarter GDP, we have Friday, the Fed's favorite gauge of inflation, the PCE inflation data. So we'll be watching that year over year. It is expected to be higher than the previous reading, 2.5% opposed to 2.3 with the headline number. The core year over year is expected to come in a little bit higher at 2.9%, higher than the 2.8%. So again, pay attention to this inflation data as we go into next week after the Fed, because again, it is closely watched. It is the Fed's favorite gauge of inflation. Now, what happened this week, the previous week, we went up to that 6,100 area on the S&P 500, and we turned off of it ever so slightly. This week, we sold off Monday and Tuesday. We gapped higher with the CPI back up, and then we gapped back down with the PPI. Remember, I keep telling you, oftentimes one day is up and one day is down, and that's exactly what happened here. The CPI gave us a rally. And then we stalled out and we came back down, gapping lower. Here was a gap up and then a gap back down. And this gap, we sold off. Let me just move some things so you can see this a little bit clearer here. We down on Thursday with the PPI, and then we gapped higher on Friday, and that was on the intraday chart. It was a gap and trap. We gapped up higher and we came back down, and we went back down to fill the gap down here on the higher with the CPI. So, and that is forming a triangle on the 16-minute chart, and rebounded off of this fill area, and it's forming a triangle on the 60-minute chart, which I think it was going to be a continuation pattern. In my opinion, I think we're still going to go up and reach the target levels I've talked about. That's what happened all week, and on Friday, again, it was a gap and trap, but pretty interesting, these gaps up and down and how they're forming a triangle. Let me show you that. Here it is on the 60-minute chart. Now, again, I told you, we came back and we filled this gap on the S&P. NASDAQ didn't do that. It's making some interesting candlesticks. It's pretty interesting, the candlestick that it formed on Friday. So I'll share that with you later, but make sure you watch what's going on with the NASDAQ this week. The S&P 500 60-minute time frame came back, filled the gap. We rallied up with the CPI. We gapped lower with the PPI, and it's forming this triangle. I think it's a continuation in all likelihood that we're going to go up and we're going to hit that upper boundary, probably with the Fed. And maybe it goes on into the holidays here with lighter trading volume. Again, we could see a peak possibly there. Or again, if it drags out on into the new year, you got a pretty good shot. You're going to see something happen here in December, but it could drag out. The market takes its time doing what it's going to do. I talked about the sell-off over here. We had a triangle there. I told you I expected still going to go higher, and I thought, hey, maybe that triangle could take us higher. I told you it could be a continuation or reversal pattern, though. Same thing here, continuation or reversal pattern. If it's a reversal, you can come down to that 200 still before going higher. But I think you got a possible continuation going into the Fed meeting. The bullish diversions ahead of the election results and the last Fed meeting, and I told you again, this was warning we were going to get a rally ahead of the election. We did. We gapped higher sharply, continued on with the Fed, and then we peaked. I told you we were going to get a pullback, but I told you we were still going to go high because why? We didn't reach the objective target. We didn't do that very last day of November for the monthly chart, and we still haven't reached it for the weekly chart. So again, I remain bullish. We're going to get a pullback, but then I told you we were going to bounce here. We hit the 200 here. We hit the 20 in the daily. Over here, we bounced up the 50 in the daily, and I talked about that at the time. Formed this rising wedge. We formed some divergences here. Warned you about that. Again, I told you we could sell off, but then still make new all-time highs. We saw NASDAQ do that, and it moved above the peak over here. NASDAQ did. S&P did not. I warned you about that we were turning off the trend line with this peak right here from July in the daily time frame. But I think we're going to still clear that. NASDAQ already cleared it. Possible we're witnessing a topping process on NASDAQ with the doji that we got. I'll be showing you that chart. I think you got a continuation. Now, again, same thing I told you over here. I still think we're going to go higher. Are we going to get one of these, and then you go where you come down to the 200 and then you go, or are you going to see an upward resolution immediately? Regardless, I think we're going to go higher than the peak over here. I'll be watching for probably a brand new divergence. We could build upon the one over here. That could be a possibility. Like I said, I think we're going to overthrow that 6,000 area that we've hit already. Monthly chart, we went right up to 6,100 and turned down off of it. I think we're going to move up into the 6,100 area. What was the peak up right here? I think it was 6,099. I think we were like a point below it, a fraction, and a fraction of a point. So I think we're still going to go on up here. I think we're going to reach that target. It's just to suck in more people, more and more bulls believing that they are indestructible. Seen it over and over again. The same thing at the 2007 top. We saw the same thing at the 2000 top. I think you got a continuation pattern here myself, but if it ends up with a downward resolution with the Fed, if the triangle breaks, I think you'll go down to the 200 and still reach my target. If it has an upward resolution, again, I think you'll move towards my target with the Fed meeting next week. See, can we peak in December, or does this drag out into January? But I think that, again, a good shot of it happening here in December, and if not, very, very high probability in January. The recession indicators, and now we have the uninverting of the 10 and 3 month, and hey, it's about to happen. Before it happens, the stock market is likely going to peak and to turn down. 2007, the stock market peaked in October. The recession hit in December. The Fed was still blindsided to it, and then finally realized, gee, going to have a soft landing like we keep telling everybody. And they did the emergency rate cut in January, and they did it right ahead of their meeting, and then they did another big jumbo cut. So we got a 75 basis point cut and then a 0.5% cut in January of 2008 because the Fed was blindsided by the recession, focusing on inflation, which was much higher than it is right now. That's what I keep saying. You go look on social media, you go turn on the channels, the financial channels, and they're all talking about the inflation and have the, which I've been predicting was going to turn back up, and we did. We're now seeing evidence of that with the wholesale inflation, with the PPI moving up sharply there, and the market pulled back on it to form this triangle. So I think we still go higher. What the Fed says in their statement, see if we rally into the trend line ahead of the Fed or with the Fed or after the Fed. But here in December, I think you're going to reach that trend line, or at least you got a pretty good shot that it's going to happen. The trend lines I've been talking about in the daily and the weekly time frame. We had a couple of triangles here develop. We have one right now. Okay, and again, we had one right here, but it turned down. Then we went back up. We had one over here. Remember when I told you right over here, when we got the Fed meeting September 18th, I told you we were going to get, and before that, I told you long before that, when we were selling off in July, which I told you was going to happen, I told you we're going to get a Fed pivot rally. That's what's happened. move to new all-time highs. And here we got that breakout to new all-time highs. And we had the triangle, we had the breakout, the back test, a triangle, triangle, and now here another triangle. Now we turned down off of, see this dotted red line? That's the July peak right there, the previous all-time high. We turned down off of that, connecting this peak and this peak here. We turned down off of it. I think we're going to bust up through it, and I think you're going to hit this trend line right here. And that should take us to the high 6100 area, possibly into the 6200 area, depending on when we reach it. Be closer to that this week. Again, the trend line rises to the right of the chart. It's not a number that's my target, it's the trend line. Okay, and the further right you go to the chart, the higher the trend line goes. So if we were to get a big move and hit it immediately, maybe we're at that high 6100 area. If we take a little bit more time doing it, maybe we get on into 6200. And again, thing for the weekly chart, it is the trend line that is the target, not a number. We could form a brand new divergence here or build upon this one, and I think we will reach that. You've got a continuation pattern. If we drop back down to the 200, you have the trend line right here on the 60-minute chart and the daily chart, which again would find support right there. So again, I don't know if we come down here and then go up, but again, I'm telling you what I think. I think we're going to go up and hit the trend line. I continue to remain bullish. Yes, I think a top is under construction, but I still think the S&P goes higher. I see evidence of a reversal that would change my mind. I don't see that right now. I still think we go higher. Take the MACD. I told you about the divergences on the RSI and the MACD. Well, we firmed up around the center line, and I think that again, if we get an upward resolution, we could see this turn back up. If we go down, we would buy more time before reaching the target. If this trend line breaks, then again, that would be very bearish indeed. Have to be confirmed. Remember, we broke the trend line over here. We broke the trend line right here with this move, but it was never confirmed. Confirmation of fall through, we formed bullish divergence ahead of the presidential election. I talked about all of that at the time. We were bouncing off the 50. I told you I thought we'd bounce off of the horizontal support as well. Trend lines can break, but then be redefined. And I think that's what we have here with our rising wedge boundaries. Longer term trend line on the monthly chart, I don't think that channel is going to be redefined. I think, again, we're just overthrowing it a little bit, S&P, and I think that highly unlikely we're going to be able to remain above that trend line. But I do think we're going back above 6,100, so I think we'll be above it. How we close the month out or on into January. Here's a daily chart, and again, look at right here. We have the trend line right here, including the shadow, excluding the shadow. And we broke the trend line, but there was no confirmation, no follow through, and the boundary changed. If we take that trend line out, we come back down further, take out the 20, take out the trend line here, start getting a confirmation and a follow through to a breakdown, then suggest a reversal is starting. I think we're going to get above this red trend line right here, move to the black trend line. I think we've got that, sideways consolidation going on. I talked about this with the awesome oscillator all week long. All week long, I told you the awesome oscillators turned red, but I think it's going to, eventually give us a divergence. I saw the MACD roll over. We could still see a divergence in this more recent price action. The RSI, I think, could still come up here and end up forming a larger divergence. Even if we come back and we take out this level, and by the way, we bounced off this area of support right here, and that's our gap fill area. I think that even if we come back down to this level, we'll still come up there. But again, if it takes its time doing that, the longer it takes to do it, the higher this trend line goes. That would take us up into the 6,200 area in all likelihood. I think we're going to likely get an upward resolution of the triangle and probably see a divergence develop on the RSI here, on the awesome oscillator, daily time frame as well. So I'll be looking for some kind of divergence to develop, something that looks like this or this. Some of these divergences that developed at other peaks, I think we could see that here. Talked about the divergence here with momentum. Look at this. Again, we had the rollover here with momentum. We had the rollover here right now, new fresh peak right here above this high. Well, over here, we corrected sideways. Look at that. And I think you're doing the same thing right here. Maybe it's not done yet, but you got that triangle going on, or maybe we go down and have a downward resolution and then go back up. However it unfolds, I think you're coming up to that trend line in all likelihood. I think you'll see something like this where you get this sideways move, and then you get this push higher. And I think you're going to see something like that. And again, it may be that we go down and get a bigger push higher, to complete the final blow off top here, to complete the blow off top here. But again, however it unfolds, again, I'm looking at this trend line. And again, whether we hit it sooner or later, I'm looking for the trend line tagged. But, like I said, the high 6,100 area, maybe on it to 6,200 if we take our time reaching it. I think you're going to reach it. At that upper Bollinger Band as well, we tagged the upper Bollinger Band at this trend line and then turned down, and we've been going sideways here with the inflation data. S&P daily here. Again, this chart here, again, I drew the arrow. Remember, I talked about the bounce off of, I was expecting the bounce off the 20 here, the bounce off the 15 horizontal support. Again, I drew this arrow, told you I thought we'd reach that level, but I talked about this trend line and how we stalled there as we were hitting that trend line. I talked about that as well. I still think we're going to go above that and reach the other trend line. So again, just looking at moving averages here, we're seeing the 10 period. We're just kind of hopping, skipping, and jumping around that 10 period, above it and below it. And again, kind of going sideways. If we drop lower, we've got our 20. We've got the trend line here and our 50 below that. So I think that, again, you got a good shot that triangle is going to be a continuation pattern for the S&P on the 60-minute chart. And then I think we're going to see indicators begin to form the divergences. I've talked about it with the awesome oscillator. Here, I think we could see the same thing and tick up and end up forming a divergence. I talked about this trend line up here, this black trend line. The dotted one is including the shadow over here. The black one does not include the shadow. I think you're going to reach the black one in all likelihood. And that's very much in line with the trend line on the upper channel line in the weekly time frame. Very close to the trend line right here that I've talked about, again, from the 2023 low. It was support here. We bounced, we broke it, and we've seen it act as resistance over and over and over and over. And again, it's likely we're going to gravitate towards that trend line and peak out and then begin a reversal. This time, it's likely to be a reversal based on the multiple point divergences in the weekly time frame and the monthly time frame. This divergence is likely to produce a reversal. This one gave us a pullback in April after we peaked in March. The same thing down here on the MACD. Again, I think that you probably get a divergence in this more recent price action to go up and hit that level in all likelihood. We have our larger rising wedge here. The one I showed you was on the daily chart. This one goes back to the peaks, the first peak there in 2024. Next, the March peak to the July peak. And again, that would take us up very close to this upper boundary, which is what I think we could reach. And maybe we do that next week with the Fed. Complete the divergence here, you're likely going to reach this level. The upper boundary is parallel with the lows here, the lower boundary. And again, this is why I told you I thought we'd overthrow the trend line in the monthly time frame, which we have already reached the very last day of trading in November. I told you we're going up in the high 6,100 area. And again, if we take our time reaching this level, again, it could go as high as 6,200. The 6,200 range. But you got a beautiful negative divergence here in the more recent price action on our stochastic. Probably going to finish very soon here. My guess is you're going to see it finish in December. Maybe it drags out to January, but again, the odds favor it. You've got a multiple point divergence on the MACD. Got it down here on the price oscillator. It is everywhere. I mean, it's multiple point divergences are everywhere. And again, that's the strongest, a triple negative divergence and the quadruple negative divergence on the RSI and the MACD and the price oscillator. Strongest reversal signal in technical analysis. This is where I think we're headed, and we could head there with the Fed meeting. Fed meetings often mark tops, bottoms. We may rally with the Fed and reach it. We may rally ahead of the Fed, rally with the Fed, and go on into the holidays, reach a peak. But this is where I think we're going. Again, if we zoom out, again, the 2020 simple divergence created a 35% sell-off, a 35% crash. The 2022 divergence created a 27.5% crash. And again, the people telling us that told us that wasn't going to happen, or as bullish as they are right here now, told us it wasn't going to happen. The very people that told us it wasn't going to happen are telling us, oh, that was a bear market, it's over, and we're in a brand new bull market. The bull market never ended. Never. The bull market's still going on. This was just a major sell-off, and this was a crash in the larger bull market. Oh, that's a bear market. It was not the bear market. Oh, we dropped more than 20%. You're wrong. No. Up 35% here in 3.5 weeks. Was that the shortest bear market in history? S&P sold off. It dropped below the 50, but it found support at the 200. 200-week moving average. The 50 failed to cross below the 200. In order to have a bear market, you got to take out the 200 in the weekly time frame. The 50 earlier, I meant the 200. You got to take out the 200 in the weekly time frame. You got to take out the 50-week or the 50-month in the monthly time frame. We did not do that. We briefly dropped below them, then bounced off of them. You got to take out the 200-week moving average. It's still rising. It's still pointing up, and we're bouncing off of it. Thing over here, we dropped below it, but then we got right back above it with the sell-off with the pandemic. We couldn't stay below it. You got to stay below it and have a downtrend in order to get your bear market, or to confirm it anyways, and we did not do that. This was a major correction. Divergences are going to play out. There's so much complacency. Got sentiment indicators, a lot of complacency. We have more complacency now than we did at the 2000 top, and there was a lot of complacency back then. I think we reached this level, but I told you I thought we'd reach that weekly trend line and overthrow this area. We've already done that here, and we reached the trend line finally the very last day of the month of November, which was Black Friday on the 29th, 2 weeks ago. I told you, I'm going to reach your target. S&P is going to make new all-time highs. I mean, reach the target, and I told you that was that mid 6,000 area. We tagged that on Black Friday, and I told you we were going to overthrow it. We have done that. I still think we're going to overthrow it even more, reach the target in the weekly time frame, but then I think we're going to turn. We could turn before the month ends, as I've said, drag on out into January, but I think that, again, that recession show up in all likelihood in the first quarter, possibly early in the second quarter, but my guess is you're going to see it in the first quarter. S&P monthly chart, long-term trend line, highly unlikely you're going to get above this and stay above it and just, go at a 90-degree angle. I mean, we're already at a steep angle of ascent right here. Very unlikely we're going to get above this level and stay above it. Again, you can overthrow it, but unlikely you're going to be able to stay above it. Recession has already been signaled. People get complacent. Oh, this time is different. That's, the AI rally, this time is different. It is about to get a lot of competition. That's why I keep saying, and I'll show you the chart. Again, the head and shoulders might be done with NVIDIA now. I'll show you my next video on Sunday. Well, I think we are going to, I told you we go up to this trend line at that mid 6,000 area. We did. We reached that 2 weeks ago. I told you I thought we'd overthrow it. I don't think we're done yet. And again, that's what I think we're doing right now. And I think that the continuation pattern on the 60-minute chart would probably likely take us to the high 6,100 area, maybe on into the 6,200 area. Again, I talked about this trend line. The longer you take to reach it, the higher the trend line goes. Where we reached it in the mid 6,000 area, it was just under 6,000. It's the trend line that's the target, not some number. I'll reach this trend line. I told you I thought we'd overthrow it. Watch the weekly trend line as we go into the Fed meeting next week, and the daily upper boundary, the daily chart there on the bearish rising wedge on the daily chart.